Okay, guys, so that is really what I want to talk to you guys about today. The news is so important, right? It actually can subliminally brainwash you, because if you have the news on in the background and they say, oh, this market's going to continue, this is the best ever, we're coming into earnings season, this is going to be amazing. Well, you know what, that might not always be true. There might be some ulterior motives there. And I'll just go ahead and get into the legal disclaimer. Everything that you see here is for educational purposes. Trading any sort of securities instrument does come with high degrees of and varying degrees of risk. And if you guys are learning a new method with trading, I highly recommend that you go ahead and paper trade for 6 months. If you are not able to go ahead and prove it on paper that you are going to be profitable with a strategy, it really would not be in your best interest to move forward with real capital. So if you are starting out, or if you are changing over to maybe a new strategy that you are learning from somebody else, then please, please, please paper trade, because the market will be happy to take your money. All right, so a little bit more about myself and where you can find me, more about where you can find me. I'm pretty much everywhere as Airplane Jane. I am a licensed pilot, and I did work in the airline industry, which the whole airline sector is loving oil today and doing really well. So you can reach me on Twitter, Instagram, YouTube, LinkedIn, email. I also work as an educator with the Stock Whisperer Trading Company and in the training pits. And as a female trader, when I was first starting out, I was really looking for a book to educate me about other female traders in the industry, not Susie Orman or these big financial planners, somebody who's really day trading, because I am a day trader and a swing trader. And there wasn't a book that I found, so I went ahead and I created one. And it's written much like in the style of Market Wizards or Momo Traders. And it is an interview style book about female traders from 5 months of experience to 25 plus years. And I actually won 2 awards for it as well. So how I actually really came to the trading world was originally, at the breakfast table, way back before internet was really this accessible as it is nowadays. My parents would sit at the breakfast table reading their Wall Street Journal, and I got curious and I started saying, what's this high and what's this low and what's this PE and what's a dividend? And I was starting to learn about stocks from an investment value fundamental standpoint. And so after college, I ended up going from a banking job over to being a broker's assistant for 4 different brokers. And I went through and I got my Series 7 license to go ahead and be able to trade with other people's money. And I was in the office and back in 2000 when the dot-com bubble was happening and WorldCom went boom. And I saw devastation happen to these clients that were part of the WorldCom office, to the employees that had taken out money on margin against their options and they'd never exercised them. So I thought, you know what, I really do not want to work with other people's money in the stock brokerage world. So I left. I went off to culinary school in Europe, and then later, after immigrating to Canada, I found myself pregnant and I was laid off at 8 months pregnant. And I thought, man, what am I going to do, right? So I ended up turning back to trading after my husband had said, hey, you know what, you had a great trade. You turned 25 into 250,000. Maybe you look at that. So sure enough, I did, and I started doing self-study and really fell in love with trading. I love numbers, fell in love with the charts, and really the pulse of the market. And so I started out being a scalper and then more of an intraday trader. And now I do even more swing trading because I see that there's a lot of value, like Mr. Morgan was talking about swing trading, that long-term position holding. It can be very, very profitable. Over the past year, the 30% of the S&P. And if you're doing intraday trading, it's just that small range that you get throughout the day. Whereas swing trading, as long as you're in that trend, you can still be fairly profitable over the long term. So what about all this breaking news, right? We've never had so many tweets from a president. And a lot of this news can really drive you crazy if you're sitting there and you are listening to all of it, right? Because let's see, if you guys have any questions, just pop it up. I'm not sure if I can see them all, but go ahead and shoot them away. So right now, it's like, what is going on? What is going on with all this craziness with the news? We've got the coronavirus, we've got the trade deal, we have the impeachment. There's always something going on. Well, have you ever noticed that when you're listening to these news channels, that they are there and they're saying, hey, this moved because, this moved because. Very rarely are they saying this is going to be what's going to happen to this stock, or they're giving you really the highlights of which ones to watch. All right. So, you know, have you ever noticed that if you are watching a stock and you're like, yes, stock just got upgraded, sure enough, it pops up that day and then boom, big sell-off, or vice versa. You have a stock that's been downgraded and then it hits a peak or hits a support area, and it's starting to just plateau there, and then it goes and it takes off again. You know, many times the exact opposite will happen with these recommendations, and sometimes it could be the big analysts from these big companies, you know, the big brokerage houses that are saying, hey, let's go ahead and sell, for example, Facebook. I'm going to upgrade it. Let's give it an upgrade today, and we're going to be able to go ahead and get out of our position because we're going to go ahead and plant the seed in everybody's ear. Hey, go ahead and buy Facebook. It's going up, or vice versa. And is this bull market really going to go on forever, right? Oh, this is the melt up that we're going to have. This is going to be crazy. Everybody's short and we're going to melt up. Or is this the beginning of the recession? So you'll find yourself in this cycle many times, right, as a buyer, but this happens with the market as well, right? You're optimistic, you get into a trade, there's excitement, there's the thrill of it. Yes, I'm so smart. Look at this stock, it's going up. I can't believe it. And then you hit the euphoria. I actually just did a blog post about this this weekend at cjandtrade.com. You know, are we at a point of euphoria in the market? Have we hit this point that everybody's saying this market's going to go on forever? This is amazing. You need to get in. Don't miss out. You just missed 30% this past year. Don't miss out on the market. Well, we might just be right here. And I will start to show you why. And then, of course, you know, this was the despondency point. This was like back in Christmas of 2018. If you look at the news headlines of the 24th, oh, this market's not going, you know, the bull market's done, right? And then what happened? Right on up the hill we went, back over here, right? So at this point, leaning more towards the euphoria stage right now than the just going up the hill. And I'll show you why. So we have the headlines from December 24th, 2018 from Barrons. This was Christmas Eve. This was the absolute worst sell-off of 2018, the biggest drop of the year. Meanwhile, the Nasdaq's party is over for now, right? So they're saying it's not looking good. Nothing is looking good, right? And then we have this one this week. Barrons, Dow is going to 30,000. Why stocks could vault past this milestone, right? The market's a big run. Well, let me tell you a little bit more about the dark pools. I have been following the dark pools since 2017 now. And it all came about once I was writing my book and I encountered Stephanie Cameron, who's been trading for over 25 years. And she started following the dark pools through the Instinet machine. So the dark pools were established back in 1979. And it was a place for the large brokerage houses or anybody that wanted to place a really big trade. They had the ability to go ahead and put their order in. So say if you wanted to buy 1 million shares of Facebook, if you had that buy order in and it was sitting there on the books on the level 2, it would really scare people away from selling, right? So they wouldn't be able to actually fill their order at a price that they would want. So there was the dark pool where they could go ahead and they could put their big orders out there. It was hidden in the dark, and they would get amazing fills and lower commissions when commissions were really an issue. And then they would have up to 3 hours to report their trade. However, they figured out a little trick. Okay, well, maybe if we route it through a foreign desk, we can delay that reporting for 24 hours. So sure enough, it went on the Instinet machine, which is now on the books. You can see it. You can see all the orders on the books. However, these prints of these large trades are still coming through. And when you follow these really big guys, it's pretty easy to be profitable. So let me show you a little bit more. So those headlines, right? We had the headlines of the 24th of December right here, right? And what happened after that? 30%, right? We just had those headlines that this market's gonna melt up, basically. This is going to continue. We're gonna surpass this milestone right here, right at the top, right? Well, what happened on December 24th? We had 12.2 million prints on the S&P 500 ETF, the SPY, right? So we had 12.2 million on the 24th when that headline was coming out saying the NASDAQ bull run is over. On the 26th, we had an additional 26 million, right? So we're looking at 39.1 million. And when we go back, what happened? That was the bottom, right? All those, this was the 26th, excuse me, this was the 26th right here. This is the 24th. So the 26th happened, 24th happened, 26th, off to the races, right? Never looked back, never came back down to this level. Well, we're up here now, right? And let's skip forward a little bit. So we find these prints at Charles Schwab, Street Smart Edge. With the TD merger, there might be a change. Not sure about that. But we go ahead and we see these massive prints coming through, right? And we see them, and then we see the moves that happen, just like from December 24th all the way up until now. A nice, good year run, right? So we had these back of last year. Gold. Many times, if you also look at the seasonality of gold, you'll see the absolute beginning of January, it peaks for a little bit, drops down, middle of the month to the 3rd week of the month, we start to get more gold prints, and then it rips all the way up through the end of February as a seasonality. Well, here we started seeing lots of prints on gold, and we're like, okay, there's something that's going to happen with gold. And we kept seeing them, and we kept seeing them. I mean, we started seeing them. Look, we saw them. This is a file that we have, but we saw these from January 23rd all the way through May 8th of 2019. So they were laying their position in this nice little channel range right here, right? And then all of a sudden, once it broke above, boom, up, right? And they had all this time that they were buying in and back up again. A little bit of a bull flag, and then up again. GDX prints, same thing. You know, Mr. Morgan was talking about the silver. We've seen a lot of silver prints too. So yes, silver looks like it could have that major move coming again. GDX, big position again for about 6 months, and then up, pull back, and then we're a bit of an upswing again. We have TLT, right? So TLT is here. We have this massive print and large prints coming in, and then way back up again. So what is really, really pertinent today? So I went through, we were talking about December of 2018. And so December of 2018, we started seeing those big prints. This is the past 3 trading days prior to today, right? So Friday, January 17th, we had 21 million shares in prints, right? And that was a range of 30.79 to 31.79, right? So we have a nice dollar range, and it's 21 million shares. Chump change, right? 21 million times 330,000. I got that in my pocket. Then on the 20th, again, we see lots of big prints, 18.3 million shares of prints, right? And that price range from 331.02 to 332.15. Okay, so another dollar range there for that 18 million. Now you might be saying, Jane, you know, we see so many prints on the SPY. There's so much that's traded every day, which that's true. There is a lot that's traded every day. This is the most heavily traded ETF around the world. The US markets have the largest market cap of any market around the globe. So why would you be surprised that you're seeing this? And then 11 million January 21st, yesterday. At 332.66 was the high, and the low of 331.99, the close from the prior day. Well, this is why it's really strategic and important that we're seeing all of these prints. We happen to be at a top right now. And you know what? This happens to be more than we saw in buying, right? This is the total number of prints that we've had today up until 12:30. I wanted to keep it super relevant, right? So you look back and you're like, okay, now this is significant, right? How much have we had today so far? These are opening prints right here. So that's 236,000, 270, 80, 300,000 shares versus 51 million over the past 3 days. So this is significant. This is something that we watch and we are keeping our eyes on, because when we see massive prints like this, there is a massive move that will come. Now, is this move going to be one that is going to be ripping higher or ripping lower? We don't know. However, we also saw prints coming in on the fear index. We saw prints coming in on gold. We saw prints coming in on oil. Potential transfer of wealth around the market. You know, these guys, this is going to be $16.9 billion. It's a $16.9 billion position. So somebody knows something somewhere. I don't have any insider information. However, I can see that there's going to be a big move. I can see that there's going to be a major move in this market. Now, everybody's saying, oh, they've been talking about the impending recession, Now, all of a sudden, Barrons has flipped all of a sudden and saying, okay, this bull market can't stop. This is going to go on forever. We're in that potential euphoria stage, right, of the market, where this could actually turn into something massive to the downside. And it might have just started 3 days ago. And it's not that I wish this to be the top or anything like that. It's just significant prints of which we are going to follow. And learning how to follow these prints can be amazingly profitable, because you can see that when you're dealing with a $16.9 billion position, do you want to be on the wrong side of that trade? I mean, if you're going in with a new trade or going in with options on a small position, it could easily get burned, right? And so knowing about where these big guys are putting their money, where they're taking their money out, where they're putting their money, what they're putting it into, by seeing these prints come across, right? We happen to see prints on the SPY. We happen to see prints on TLT, for example, as well. We happen to see prints on GOLD, Barrick Gold. Now, is it a coincidence that all these headlines are coming out and the news is saying this bull market can't stop, because they might want to be putting in the idea of into people's brains, hey, you know, we want to hype everybody up. Those lawyers, those doctors out there that want to get into the market, they missed out on this 30% increase, and we want to go ahead and we want to encourage them to go ahead and buy, because if we can get them to buy, that means we can sell. Because when you have a large trade that's going to be 1 million shares, let's go back to the prints here for a second. When you have a large trade, the biggest one I think was 2.87 million shares. There's always somebody on the other side of that trade. So if this is happening in the dark pool, you've got the big giant whale with all the money, and you've got all these little guppies on the other side. And that whale is going to dominate the market. They can change the direction of the water. They can do whatever they want with their strength. Whereas the small retail traders and the little investors were peanuts compared to these big guys with all $16 million, right? Excuse me, $1 billion. You don't want to find yourself on the wrong side of that trade. You know, whether it's a long-term investment and you start to see something, it's like when Facebook had its face plant, right? We saw prints coming out. When the drones were coming and attacking, you know, the drone incidents with oil, we saw prints on oil a week before. What happened? Boom, we saw the reaction come. You know, and we started to see these prints last Friday. And we're like, uh-oh, hey, hold on. This is a pretty nice amount up here. Maybe we need to pay attention to this. And then a second day, and then a third day. And now our fourth day, maybe they're done. And where are we going from here, right? What is going to, where are we potentially going? We've hit this top, right? This was back on the 17th, 20th, 21st, and today. And we haven't plummeted down. You know, obviously, if this is a correction, or even more, if this is a recession, and they've taken this time, you can also see in the candlesticks too, you know, a consolidation of 3 days, whereas we really haven't had that consolidation going up. We had a bit of consolidation back here in the middle of December, but really since then we haven't had a large consolidation time. And this was trading up on air, right, away from the averages. This black line is the VWAP right here, and this is the 4 EMA and the 8 EMA. So we're starting to see, okay, the volume weighted average price has dropped over the averages. We see that we're now trading below the 4 EMA. We touched the 8 EMA today. However, the end of the day could really signify where we are going to go from here. Are we going to go ahead and close up higher than where we closed yesterday? Or are we going to go ahead and continue to the downward side? So seeing all of this and putting the puzzle pieces together, we happen to be at a top, right? We just happen to be hitting all-time market highs. We happen to be seeing 51 million prints, you know, shares being printed of trades that have happened in the dark pool. And we're seeing headlines that are saying this bull market can't stop. Yet, if you go back to December, they were still talking about this debt bubble that's going to implode the economy, and how we're going to go ahead and we're going to have all these negatives happen. That's why Trump was so frustrated with the Fed, because they weren't cutting rates, they weren't cutting, because he wanted the market, well, in my opinion, you know, he wanted to have that go ahead and spur the market up. Now, where are they talking about the rates? You know, is anybody talking about negativity, like dropping the rates because the market's doing so poorly? No, they're talking about how this is going to continue going up, right? And all these subliminal messages get stuck into your brain, and then you say, oh yeah, you know what, this market really is going to go up. Do you know how often I actually have the news on when I'm trading? I don't use it. I'm using the prints, I'm using the technical chart, and I'm looking and trading it with gray candlesticks so that I don't even get caught up with my mind with red and green. Because if this was red and green, then it's going to really mess with my brain. Oh, look, it's a green candlestick. Oh, it was going up. right? But if it's just strictly, it's like black and white. If you're just seeing the actual technicals of it and you have the prints and you know, all right, look, we have prints, big, massive prints right up here, and volume is dropping off, right? These super high volume days, they were the top of the market. And now it's been dropping off a little bit. You know, where are we going to go? Or we could potentially test 327.66 here. We could test 326. And then we've got this trend line. And we've got some more speed bumps right here at 323. You know, we could have a nice big move. You know, maybe down to the 50 SMA, and then we bounce. That could be a bit of a correction. You know, it's about 20 points, not even 10%. So we might have a little sizable correction, but the fact that we've had 51 million and we haven't seen that since December 24th, it could really be more than just a little correction. This could start a recession right here for the market based on the size of the position. That's it. You know, and it's really paying attention and looking back to prior levels. So you might say, how do you trade this, right? So the Darkpool print happens, and then we try to keep it fairly simple, right? Bullish above the level and bearish below. So if it's bullish above, you buy the stock and you go long, or you could buy call options, or you could buy a vertical call spread. You know, there's options have options on how you want to go ahead and trade them. And if you're already in the position, you know, you could sell against it, all that sort of stuff. If it goes below the Darkpool level, we go bearish. We go ahead and we sell the stock and go short, or we're going to go ahead and we're going to buy puts. And we aim for the target, right? We have our targets that we map out with the trades, whether it's longer term swings or whether it's intraday day trading. And we go ahead and we have seen time and time again that certain levels perform, certain moving averages perform with computers that are programmed to buy and sell off of them. Also, other indicators on the chart that we use to look at for certain levels. And when these guys are dealing with billions of dollars, right, wouldn't you want to be working with them instead of working against them? Because these guys are the ones that can move the market, right? And so if you have that ability to work with them and you don't have to have a hedge fund or the capital of a hedge fund, you can easily do it yourself in a trading community or even learn by yourself. So for absolute newbie traders that are just coming into the trading world, or if you want to reset your trading to learn about the Darkpool and trade around the Darkpool, we have the Training Pit, which is a trading room, more of a training room, where we really help teach people all about how to set up the charts. You know, for some people that are brand new to investing or want to take control of their own 401k, they might not understand what a chart is. They might not understand, they know the concept of a stock too, but they might not actually understand the history of it and why it's important or who the SEC is. So we try not to take anything for granted in this room and really help people understand their foundation first, right? If you have a pyramid or if you're building a house, you need that solid foundation at the bottom before you can go any further. And that's exactly what this is. Or you can do self-study with the prints. There's a Darkpool app, the Stock Whisperer app. It's going through updates right now. So actually everything is free on Twitter. If you go to the Stock Whisperer, just follow Stephanie at the Stock Whisperer. Actually, she's the Stock Princess, Stock Princess, PRINTCESS. And you can see the prints as they're coming out. She'll go ahead and put out there publicly for people. Not everything goes out there. We do have also, if you want that super intense training, I forgot to get rid of the October 28th. The next one is coming up for the boot camp for Darkpool, where it's 70 hours now instead of 50 hours of being able to learn and be there all day, watch the market, see the prints come in, learn the timing of when to get into a trade, when to get out of a trade, why you should enter a trade, what are you looking for these trades. And you know, if you talk to her, actually, if you mention that you heard it from me, you can get some extra time in the Java pit. So the Java pit is really the advanced area where I'm in that room as well. And we really work together as teams, because when people are when you have 300 sets of eyes and we're all watching the stock market, we're watching these prints, we're watching the different levels that I was talking about for the bullish above or the bearish below levels, we all work together to see each other profit. There's so much money in the stock market that we can all work together and we can all help each other profit. And that's why I was telling you guys about these prints, right? Because not everybody knows that 51 million shares of the SPY were traded over the past 3 days. That's not being put out over the news headlines. That's not being put out on CNBC. Hey, watch out for this. No, they're talking about the bull market, right? Because they're still up. Maybe they're not done selling. They might take a pause for today, and then tomorrow is going to be the big, massive move. And everybody's going to panic. Stocks are going to be taken out. And that's what, you know, it's going to drop the market. They wouldn't be saying this out on the public news channels, because then it's going to create intense fear and people will probably exit their positions overnight. Or you can get into puts, or you could go short, or there's so many different ways to be able to also protect your positions. You know, if you're in long-term positions, you could potentially buy some puts on those positions or sell some calls against them. There's lots of different strategies to be able to go ahead and protect your longer term portfolio while being able to see these prints and be prepared. The bottom line is you want to be prepared for a massive move. They've been talking about this since December of 2018, right? The market was going to go down, and now all of a sudden they switched their tune to, hey, this market's going to continue forever. No, like that doesn't, to me, that doesn't make that much sense, that all of a sudden they've switched their tune and they're saying this market's going to go up forever. And then we see 51 million shares being printed. So if you guys really want to learn about it, you know, please check it out. You're welcome to email me at jane@thedarkpools.com or stephanie@thestockwhisperer.com as well. And I also do my own watch list every day that I'm also trading, and I'm watching as well, watching different levels. And it's really a lot of the big movers for that day, the gappers, also looking at the dark pool where they might have put a print in, and it might be significant for that reason, or it could be that I'm seeing other signals in the market that might have a big move, like Facebook over the next 2 days is probably going to have a big move to it. And right now we're in the downish trend, so that might be a really big one to watch. The gold sector, GDX, NEM, Nugget, those are going to be some that are going to have some big moves, as well as Adobe. So, you know, you can watch back, look at those stocks over the next couple of days, see if these big moves happen. You know, there's signs that we see that the moves are going to come. Looks like there's a question. Hold on. Click to see the question. Trader. Sorry, guys. I don't know how to get to the questions very well here. Somebody raised their hand. Is there any question there? Or no, it's just the chat. I can see the chat now. Okay. And if you guys want to, if you guys are interested in signing up for my watch list, you can go and use Investor and you'll receive 20% off of the watch list. It's really affordable. It's less than $1 a day pretty much with the 20% off. And you're going to get 10 stocks that are going to be volatile for the day, that are going to have big movement. They've had large movements, and there's potentially more movement to come. daily short percentage, that's something that I really watch for the up gappers for the day, like STM today. STM had 72% daily short volume, meaning the volume from the day prior was 72% short reported to FINRA. So it was roughly 1.7 million. At the time that the market opened, it still hadn't had 1.7 million that had been traded. So I'm going to go ahead and watch that. And if it starts to go ahead and press up and it's going to go ahead and break that resistance, that bullish above level in my head of 30.50, then that's going to be a pretty big indication that that could really run until that 1.7 million has been covered, right? Because if we're getting all these short squeezes, started to see Tesla had over 65 days of more than 50% short volume. Finally, the past 3 days, it has been less than 50%. We had a major hedge fund that got burned because of being stubborn with their Tesla position, and their ego took over. Instead of saying, they probably were adding to their position and adding and adding and adding. And in the end, when you see a $300 stock double in less than 6 months, there's some reason behind it. Initially, Musk had his tweeting abilities taken away, so he was leaking emails. Then it started going the right direction, and then the shorts just started to get squeezed, and it kept happening, and it kept happening, and kept happening, until finally a major hedge fund got taken out. It hit $600, and it had doubled, and people are just like, what? How did this happen? It was a major short squeeze with 133 million shares in the stock, and it was one of the most heavily shorted stocks out there. Does anybody have any questions? I'm not sure that I can figure out. Anna, I'm sorry, I'm not technical with this.
Sure, we had you have 2 questions from member. When does your watch list comes out?
So my watch list I do write on my website, and when you subscribe, you go ahead and you get access to my website. I am a mom of 2, so I usually sit down at my desk at 8 o'clock in the morning. I'm checking what's volatile. Roughly by 8:30, I go ahead and I put this out without these support and resistance numbers in it. So you would see the float and you would see the daily short percentage volume. And then by 9 o'clock, I have everything done, and I also have photos of the let me see if I can go ahead and pull it up really quickly for you. That I go ahead and I have photos of the charts as well. So you can go ahead and see everything all in, I'm just waiting while I pull that up really quickly. You can see it in, here, let me pull it over here. All right, so should take us right there. Logged in still, there you go. So this is what you would get. So you're going to get the date. You're going to get what's, oh, I misspelled it down with the IWM. You're also going to get the global announcements. So today at 11:30 on Thursdays is going to be the natural gas announcement. If you have anything else that's going on, unemployment claims, 9:30, you have that. You also have the chart as well, broken down. And usually these are going to be a bit bigger, so you can look at it. You can also open it up, and you can see, all right, these white lines are going to be the volume profile from the prior days. So you can see that that was a resistance. It broke up above it, and then it flipped to be support. So right now, for Johnson & Johnson, it was on my list, right? So you can see my bearish below level was 148.19 and 149.19. And on Wednesday, the point of control, or the volume profile point of control, was actually 148.32. So you can see it right there in live action, and you can check it out. And was there another question, Anna?
Next question would be, is the list provided pre-market or during the day?
No, it's available pre-market by 9 o'clock. Thank you, Anna. Thank you for having me back again.